First of all, something that I forgot to add, I'm actually recording this at the end of the video. Not a financial advisor. I'm just posting this video and everything I talk about on Telegram and Instagram for education purposes. I'm not approved to give financial advices by any institution that you can imagine of. So everything that I say, everything that I show is for education purposes. The risk is on your own hands. What I recommend always is trading on demo because that's the only way to not lose money on this market. And if you feel confident enough to trade on a real account, well, that will be fully and totally on your hands. So yeah, enjoy the video. Hello everyone and welcome. Today is July 6th, Tuesday if I'm right. Yeah. I'm going to be talking about the trades that happened and basically talking about a few concepts in the meantime. This is the first video that will be uploaded on YouTube, but at the same time not the video where I will talk about different subjects that basically I discussed in the Instagram stories. That'll be for hopefully the weekend if I have the time and everything. But yeah, let's get right into it. So today for me was just one loss. I missed out on one trade and basically price didn't trigger me into two other trades that we'll be looking at in a few seconds. And the first structure that I encountered, I talked about this on the Telegram early in the morning, and that I said that I thought that I found some trades here. And actually, if we look closely, as I mentioned down here, so for me, to give you somewhat of an idea, for me to actually take a trade, I would have to actually wait for a flip and then a break. Sometimes I just need a flip, sometimes I just need a break, sometimes I need more than a flip and a break, and that of course depends on how price is basically behaving and what is the intention that is showing towards the direction, mostly. So basically, as an example, if we look closely, we do have this very small break right here where this high was breaking by this high, which basically means that this low is a higher low, and that whenever we actually break that higher low, that will be a flip. We basically change from demand in this case towards supply. So that's a flip, right? The first concept that we will be talking about today. That's the flip that you see all the time on the charts. So for me, as I said, it's a flip and then a break, right? We have a flip. I don't like the fact that I actually didn't mitigate anything. For example, price, as you can see, just reacted to maybe the middle, sorry, not the middle, but the 50% of the whole range, which it does. But I prefer when it flips, mitigates an area, and then breaks again, and this would have been my trade. Keep in mind that this happened, well, 6 a.m. I'm not up at 6 a.m. I mean, I wasn't up today at 6 a.m. And that's basically why I missed out on this trade. And at the same time, this break is not that much of a break, so that basically already doesn't give me much confidence for me to basically take that trade just right away. But yeah, so you can see any trades that happen in here were risk entries, as no flip nor important break happened until the final break. And as the final break, I mean this major break of structure, where I marked out the cost and the extreme area, which I moved this. And so an SC is a sponsored candle, which is basically a candle that took liquidity. I won't talk specifically, like very specifically, but basically this is liquidity, and this candle just pushed higher, took this liquidity, and basically continued to push lower. That's why I basically marked this as an SC, or sponsor candles. SC is just a nickname per se. Okay, so the next thing we encounter is this pattern. I call it a pattern because I've seen it a couple of times, but basically I can't really say for sure if it's it can be called a pattern. But basically, is that I've seen this pattern uh, form a couple of times where sometimes when you have a movement, or at least what I like to do, when you have a movement towards the downside, what you actually expect is for price to basically just range for a little and then continue. This is a very basic structure, very basic thing that you sometimes see. And the next thing, what could easily happen is that this same this same structure will repeat itself, right? It will be something like this and basically mitigate that area to then continue to go lower. And even this area will be something like, well, yeah, I drew it incorrectly, but basically it could have been another range in there, and basically there'll be somewhat of a continuation, somewhat of a continuation pattern or thing that repeats itself. So basically here we have that. We have an impulse, we have somewhat of a range where price basically doesn't move higher than this point or lower than this point and basically stays in the middle of those areas for a little bit, then breaks down and as you can see fails. So as an example, as soon as I woke up, this is what I saw. I saw a potential sell, but at the same time it's a pattern that I've seen repeat itself so many times that basically I decided not to trade that. Then we got the flip, which basically means that all of this structure was basically nothing but maybe liquidity. And then the break. After all that, we can already start looking for a buy, at least for me. And we even created some liquidity areas such as this one, this one. This is pretty. This is a really good area. So this is most of the times the first trade of the day. I won't actually take it. I will wait for the other trades to actually develop just before I actually take the first trade. So that's why I wasn't actually trading on this. But I was very tempted when I realized that price created this liquidity to take away right away, to take it right away, and basically, yeah. My entry was on the 25, although I wasn't actually trading this, but my entry was on the 25, so it would have missed me anyways. As you can see, price did continue to push higher and would have actually hit target. So yeah, basically that. On Telegram, I did show that I had an entry placed right on this area. And as you can see, entry based on S4. S4 for me means setup number 4, which is a complex pullback scenario. For me, a complex pullback is somewhat of what we actually talked about here. When we have somewhat of a not strong, but impulsive movement that basically continues to push higher and higher, and basically then we have something like this, just like that, and basically then it continues to push higher. So this is a complex pullback, and maybe even this could be considered a complex pullback. Even inside of these areas, we could look for some sells, like for example right there, and another one right here. But most of the times what you are actually expecting is for price to actually break higher again and then continue to look for buys, hopefully, of course. But yeah, that will be somewhat of a complex pullback. That's what I call a complex pullback. And basically, if this wasn't created and we had somewhat of a movement like this, the area that I would have actually looked for a trade would have been this area as a continuation, which is something that I have already shown on Instagram, which is something like this. Hold on, let me draw it better higher here, where we basically, let's say we have some structure like this, and basically mitigation, mitigation, mitigation. You have first trade, second trade, maybe even the third. I don't really like taking the third. I either take the first or the second. The third for me is just too much. In my opinion, it starts looking more like sort of a complex pullback, and then it'll continue to break lower. In this case, since the sample shown here. But basically, that's why I don't like taking the third one. The second one, yeah, but the third one already feels a lot for me. So I wanted to take a trade as soon as this was created and as soon as this high was broken, which I don't have drawn for some reason, but basically missed out on me. So yeah, not much else I could have really done at that point, and that's when it was somewhere around here, I just decided to delete the order. My entry was on the high of it, wasn't on the 25. It was on the high, and as you can see, I did leave a note here that I kind of wanted to take the RE. The RE is a risk entry, which is basically an entry where you don't wait for as much confirmation as you would actually wait for in a normal case. So basically, I saw this area as a pretty good and important area that basically could easily react towards the upside. And I was about to market execute here, but I wasn't really interested on it, and I said fuck it. So yeah, as you can see, price was pushing higher. I identified this as a flip. I identified this as a break, and I decided to go with the full range. And basically, as you can see, went for the 25%, missed me, so I deleted the order, and it would have been on a break even on the best case scenario. But yeah, basically, not much else to do. Sometimes the mistake that anyone can make is this, just like that, where you do choose an area and price just doesn't react or doesn't actually get as high as you wanted it to. I most of the times actually go for the 50% of the area, and when we have areas as big as this one as an example, I prefer going to the 50% to have a smaller stop loss, but that can cause um, that can cause you to miss out on a couple of opportunities that would have actually worked if you would have gone for the open or the 25% of the order block. But basically, either it's your trading plan that tells you to go for the 25 or the 50, or you just decide to go for it because of any other reason and basically it just didn't work out. It's as simple as that. Sometimes you'll get triggers, sometimes you won't. It's not a big deal. So when after a couple of, so let's say it taps the order block and it starts falling down and it didn't actually trigger me, that's when I delete the order. After a couple of minutes, I just delete the order, because if I was inside of the trade, of course I wouldn't close the trade, but not being inside of the trade, it feels like I have already missed out on a little bit of profit. And basically, if it comes back, it does feel like it's going to do this, right? So that's why I basically delete the order. Sometimes I have deleted the order and price will basically do something like this and then continue to push lower. But I don't know. I've done it like this for the past few months and it has worked out great. So probably not going to change that for now. Okay, so I have a note right there, which means nice risk entry right there. And that's this candle in the middle of nowhere. It's not an entry that you would actually go for, as it's just literally an order block in the middle of nowhere. But at the same time, it does have a good liquidity just below it. So it does give you a pretty good indication. And to be honest, I kind of was thinking about taking a sell right on this order block, but it never really broke any structure. So for me, that doesn't look that good. I mean, it did make a first good impulse, but it never really broke any structures. So for me, let's say this is the area. It taps it, breaks the structure, comes back. That for me is an entry. But if we don't have any areas such as this, just such as this example, I really don't like trading those. I showed in the Telegram also that I was thinking about taking this buy right here on this order block, which wouldn't have actually worked out. We did have liquidity and everything, but yeah, it's a trade that didn't have much to really work with, so I didn't want to risk it on that one. So yeah. Okay, let's continue. Then we got a pretty good impulse. Whenever you have a strong impulse where you actually don't have any retracements or anything like that, I like to wait for stuff to happen in the meaning that I wait for some simple complex pullbacks. I wait for price to create areas or to start to mitigate areas, such as, let's talk about this one, right? So no, let me actually draw an example, because that one doesn't look that clean. So let's say you have an impulse, right? You have something like this, pretty strong impulse. Price is not coming back to mitigate anything at all, basically. So you then get, so at this point, let's say you have one more area. You could try and trade this as a risk entry. You could try and trade this or this one, or maybe even the three of them if you actually wanted to do that, but that's not quite recommended. I wouldn't choose any of these, right? Just like that, I wouldn't actually go for any of this, because let's say you place an entry here and price does this, and let's say, okay, so it'll react to this and then it does that, and maybe okay, this one won't work, and price does that and basically continues to push lower because it can react anywhere. It can even react to something here that maybe it's just a small candle just paused for a second, as it could react to the first area or the third or the second, right? So what I do like to wait for is for price to actually come back into this area. For example, let's say this one is the one that works out, and price then breaks an area, and that's what I go for, right? That's what I would go for. So price actually reacts to an area. Hopefully it takes liquidity, gives us somewhat of a better confirmation than just that. But yeah. So here I thought about this, as we did have a small range. It was creating liquidity towards this area, so I did decided to place a trade here after we broke this low. But as you can see, it never really came back. I took a buy here, as we did have a flip, we did have a break, and it was a little bit of a risk entry. But at this point, I was feeling like, okay, so let's try and find a trade, and if we get stopped out, then we go to the other side, because it's something that you'll do very often, and that's actually the reason why I actually stopped trading or taking the first trade, because on most of the cases, I would actually just take the first trade, realize that my direction was wrong, and take the next trade that happened towards the other direction, and that one would actually work. Basically, I would take a loss and then a win, which of course you end up in profits. But it wasn't quite efficient as basically the way that I'm kind of trading lately. So yeah, I got the loss. What I realized is that we had a major break, and that was caused by this whole range itself, but I decided to go with this small area. I went for the 25% of the order block, and as you can see, it missed me by maybe a pip or even less than a pip. I mean, we can actually measure that. 0.3 ticks, actually. Well, 3 ticks, 0.3 pips. So basically what happened here is that I wanted to take the buy, and if I lost, I would have taken the sell, and I took the buy, but basically the sell didn't work out as well as I expected. So yeah, I then went for this one, which is a pause just before the break, and that one didn't trigger, and then I had to leave. I think that was 11:15, 11:20 or something like that. I had to leave home, so basically I wasn't really paying attention to the charts or anything like that anymore. Okay, so what happens later is a couple of I don't want to say good, but a couple of opportunities basically. I did not mean to open that, but I want to show Telegram for a sec. And what I said when I came back is the next. Just got back home. I saw that a lot of sales worked out. I'd be doing markup and maybe doing a video to talk a little bit about everything today. So what I basically spotted per se was a couple of opportunities as continuations, because if you saw yesterday, I have this because I'm going to show something in just a second, but if you saw yesterday, if I remember correctly, I took a trade here, or I don't know, I took it somewhere, and I think it was actually this one. I do feel like it's that one. And basically what you see is price basically breaks, mitigates, breaks, mitigates, breaks. Well, in this case we didn't actually mitigate that, but then we broke this and mitigated that, and then we have another break and another mitigation, right? So that's basically the pattern that happened yesterday, and quite what I was looking at when I came back home and realized that we had something like that. But it didn't occur as clean as I thought it did, but let's just talk about it. As an example, we have an impulsive movement basically, where we do have some pauses, somewhat of ranges or small retracements along the movement towards the downside. So let's say you wanted to decide where to take a trade. You had one opportunity here on this candle, one opportunity here on this whole range, and another opportunity here, right? So you have three areas, and the fourth and even the fifth, because even though this trade sorry, this area is supposedly mitigated. For me, until the 50% of that area isn't mitigated, it actually could still work out in the future. Maybe not as strongly as it should on the first try, but it could easily work out again. So we have this flip. We have basically somewhat of a pause here, and as you can see, price comes back and mitigates that. If you ask me why did it react to this, I can't really give you a straight answer because it's not it's not the area with the most confluences, but at the same time, it's not the worst area. It's actually one of the best areas. We basically have big impulse, pause, big impulse, and if you actually check this, sometimes I mix a lot of concepts. Let's actually do it with this one because I've been on a lot of academies and basically, um, yeah, you start to remember stuff. So you have this impulse, and price came back to react to the 50%. This is actually called premium and discount zone. So discount zone on a sell basis, on a sell scenario, you would actually look to the premium zone, and when you were trying to buy, you would actually look on the discount zone. So let's call it like this: sells, you will be looking up here, and buys will be down here, right? So if you have an impulse, it will be basically, if you had an impulse towards the upside, hold on, if you had an impulse like this, you will be looking to buy inside of this area, which is the discount zone, right? And if you had an impulse like, sometimes I really don't understand how to sell, okay, like this, you will be basically looking to trade inside of this area, right? So you wouldn't really look for an area too below. Like as an example, in my opinion, I would never go for this. I wouldn't like to go for this. This is a little bit risky, but I might, depending on the day. But the area that I would have gone for, which I actually did go for, is this one, right? But I went for this as soon as it broke out, and it never really came back, as you can see. So yeah, let's continue. So it reacts to this area, and then we have a major break. A major break is just basically a break that basically took more than supposed to actually happen, right? So we have a strong push and then break. We could actually call this a flip, as we do flip here. Yeah. So again here, right? We have, let's delete this. We have that price reacts here. I always say that you have to see where price actually reacts. If you see where price actually reacted, you could even find an opportunity. If you don't see where price reacted, well, it's simple. You sometimes you're pushing higher, 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 and this reaction maybe reacted to nowhere. This probably did so. So basically, this one, let's say it actually reacted to a pretty good area on the 1 hour, on the 4 hour, on the daily, or even on the 1 minute can be an important area. What could happen is that you look for a buy, as you see that every basically pause or every reaction is actually just a retracement to continue to go higher. Maybe you try to trade this one just like that one. You take a buy just like this, and price will do something like this and continue. Sorry, and what did I do? And basically continue to fall, right? And you would probably ask why did it got stopped out? And the thing is that you actually try to buy literally on the movement that wasn't actually going to work out. So if you check every reaction, you can find an opportunity. So here, this trade, after this break, I would have gone for this area. I'm pretty sure about it. I could have gone for the extreme, which would have actually missed me, to try, because as I showed earlier, you can go for something like this, right, where you have continuation after continuation after continuation and stuff like that. Or what could basically happen is something like this. Let's say you have a mitigation here, then you have a pause there, and price will react to that, then you have a pause there, and price will react to that, right? Oh, I did not mean to delete that. Okay, well, you were able to see it. So that's what I would have gone for. I can't really say for sure if I would have actually taken that trade, but this is what I would have actually gone for. And in this case, no, because it actually doesn't really look that good. I mean, I say it looked that good as if I should be basing myself on how pretty they are or something like that. But it's just not something clean. I Let me see if I can try to find somewhat of an example. As an example, this is a very clean range. I mean, you have somewhat of an area like this, and price is just basically staying between those ranges. So that's a good range. If I wanted to trade a range to the 50% that looked like this, I actually would like to. It actually does look pretty good. So this is not an area that I actually liked. I do like this area. It does look clean. It's a pause just before major break, so that's something that I would have gone for. And that's basically the last trade of the day. You do have a break then that this is the area or this is the range that basically caused it. And price right now is basically reacting to that, but that doesn't mean that that will work out. So basically, let's recap a little bit. Yeah, I don't know what to recap about, to be honest. I think I actually went through everything. Psychology for me wasn't on point today. I was really scared to take this one, although I do kind of, as I said, don't like trading the first trade of the day. I think it did have a lot of confluences. Even though it would have missed me, I do think I still should have placed that trade and would have actually made me proud because the analysis is right and everything. But it would have missed me anyways. But to have the analysis right, you are already doing more than, I don't know, a lot of people out there. This risk entry, I don't like to take market executions because between the second you place a market execution and you're going to place a stop loss, there could be a huge movement. So it could be in your favor as it could be against you. And I'm not saying you will burn out the account as it's a little bit hard to do that, but a good big loss could happen just because of that. I did try to take a buy here, but as you can see, price reacted again, kind of in the middle of nowhere, unless we count this whole thing as an area, and it did kind of react to that. But yeah, and I think that's all. Honestly, this is the markups. I do have to take a full screenshot, I suppose, and then pass it through the Telegram. But yeah, that'll probably take a little bit because it's probably 3 screenshots or something like that. This trade, I would have definitely missed it, as it's 6 pips stop loss. I hate that, so I would have gone at the very least for the half of it and for 4 pips stop loss. As you can see, it would have missed me, basically. And I don't really like that range because it just doesn't really react to anywhere. So I would actually go for this, just like that, and considering this high as liquidity for price to actually do this. But yeah. So every concept about liquidity, smart money concepts, the setups that I look for, the way that I actually trade, and probably some other concepts I will be mentioning on the video that hopefully I'll do in the weekend. But to be honest, it's going to be a pretty large video and it probably needs somewhat of an editing. So yeah, but I think that's pretty much it. I would like to see questions or something like that. Oh, I did want to show something actually, now that I remember. And I can't really say for sure what it was. Okay, actually, I think it was this one. So this pattern that you have right here, this, where you have an impulse, you have somewhat of a movement like this, and then price breaks down and comes back to mitigate. It's actually pretty common, or at least I've seen it a couple of times. And I base myself on the fact that sometimes we get a pretty clean impulse. We don't have any pauses. We don't have any small thing like this to actually go for before the break, of course. So let's say, let me try something. Yeah, let's say you have this, and yeah, okay. Okay, now hold on. I really hate trying. So let's say this is a very clean impulse, right? Let's say it doesn't come from mitigation. It does come from a mitigation. It does come from an important area, right? And you have a very clean, without any pauses, without any, I don't know, somewhat of a range to actually go for before the flip or the break, depending. What can happen is this. So this will react literally nowhere. Maybe there's a pause or something like that, but as I said, I'm trying to illustrate a clean impulse with no pauses or anything like that. Price basically reacts out of nowhere and causes a break. What happens sometimes is price will just come back to that and continue to push lower. What happens other times, price will go back up to the extreme and then continue to push lower. In the cases that I've seen that this happen, price actually gives you another confirmation entry, so it does give another opportunity to actually get in. But yeah, the good thing, the best thing will be to actually get into the first trade. So this is the pattern that I'm trying to illustrate here, and a pattern that actually happened yesterday, which is what I had drawn, that here as an example, we come from mitigation, right? We mitigated, I don't remember if this was the trade that I actually took or no, but yeah, basically this content. We have this break, right? We have this break. In this case, not as clean as I would want it to be, but if I wanted to go for a trading here, I might go for something like this, but my stop loss should be above this area as price could react as the whole thing as basically could react to the 50% of the whole range, right? So basically, as you can see, price, let's say we do have an entry right here, right? Stop loss up here. What price did in this case was basically react out of nowhere, because in this case it literally reacts to nowhere because it broke this high, the high of that area, because this is a pause just before a break. So that could have been considered a potential entry area. But basically broke right through that and then continue to push lower, breaking again, right? So the exact same pattern basically. Sometimes it happens cleaner, sometimes it happens less clean basically. English is not my first language and probably figured that out by now. Yeah, this is one of the trades that I actually did spot but didn't actually trade yesterday. But that's what sometimes can happen. And if you're sometimes thinking what area should I go for, that varies a lot because of different reasons. But as an example, in this case, I most of the times like to go for the cause of the break, not the extreme. The extreme will be this one in this case, of this whole impulse that caused this break. The extreme will be that case, this area, sorry, and the cause will be this, which is a pause that took liquidity and continued to push lower, right? So I probably would have gone for that, but if you are in a movement like this, where you have mitigation after mitigation after mitigation after mitigation, that's what you're probably looking for. If I wanted to look at trade on this movement that caused this break, I would go for the extreme because it comes from a mitigation. That's what has worked out for me, right? That's what has worked out for me. As an example, this case would have been a loss, but in this sell would have been a win, and this sell, well, as an example, this sell, we might would have missed out, but as it is a pattern that we've seen that happened, at least if we're talking about the past few weeks, I've seen it maybe 5, 6 times, and that's when I basically consider it a pattern. And maybe we could even consider that this pattern. I mean, I didn't really look that backwards. I just saw, okay, so where can I find that pattern that happened recently? And I found this, and I said, okay, looks like a pretty good example. So I think that's gonna be all. I talked a lot. 30 minutes, it's not much. So yeah, I think that's pretty much it. That's pretty much what happened today, and yeah, hope you all learned something, and looking forward to hear some questions through Telegram, Instagram, whatever you actually prefer, and I'll be seeing you soon.